Welcome everyone to the I Am Real Estate Show with Ray Smith and Sandra Johnson, and we appreciate you spending your time with us. We hope you enjoy today's show. We have on the show today Jon Spurr, who is the owner of Inspired Life Mortgage. We'll be discussing mortgages and financing. And we have Sherry Gillette from Caring Transitions to talk real estate sales, right?
Real estate sales.
Estate
sales. Yeah, we could say estate sales, but I think more importantly, helping your loved one in that maybe an older person be able to transition in a very comfortable way. So looking forward to hearing what she has to say.
Yeah,
for sure.
And she also has online auctions. So we have Jon Spurr in the, what's the place called? The studio?
In the studio, in the hot seat.
In the hot seat. So give us the overall, what's going on in the market right now, John?
Well, it seems like every time I'm on the show with you, it's when the Fed is meeting, and they're meeting for 2 days.
Isn't that true?
It's every time.
Every single show, it's always when they're meeting, and usually not even after. It's always right before.
And the news media is all over the place. They're saying that the Fed should have gone a half last time. They didn't do enough. The economic data we're getting is both ends of the spectrum. We had unemployment numbers come out today, which, I mean, for me, I was happy with them because rates came down a little bit, which is great, but the unemployment numbers weren't amazing. But right now, we need bad news to get better interest rates. That's
amazing.
That's just what it is. We need bad news to get better interest rates. But regardless if the Fed raises the rates quarter or a half, the market's already built a half in. We've already seen significant rate increases in the last week and a half, and the market has built in that 50 basis points, or they believe the Fed's going to go 50 basis points. Now, if they only go a quarter, that's going to be great for us. Okay, and we'll see rates come back around. But the other thing is, I was in a title company yesterday, and I just finished up a closing, and I asked the escrow officer, I go, what are you guys seeing for interest rates right now? Oh man, people are closing at 7.25. Everything's coming across at 7.25. And it blows my mind because, I mean, I have my rate sheet up right here in front of me, and I'm looking at it, and I'm like, I can do 6 3/8, 6.5 all day long. So I think a lot of it has to do with, what lenders people are using and who they're going to, and not shopping around. But rates in my book are not 7.25. You can still get rates in the mid sixes.
And is that for all lending opportunities, VA, FHA, USDA, and
VA and USDA? You can probably get into the high fives, like the whole car dealership 599. It's really 6%, but you don't have the 6 in the front, right? So, but yeah, it depends on the loan product. It depends on your credit score. There's a lot of factors: how much money you're putting down, the property you're buying. There's a lot of different things that go into the makeup of what interest rate you're going to get.
Right.
But the real message I want to make sure we get out there, or that I can get out there, is there's a significant difference in interest rate from lender to lender. And if it's a banker or a broker or a retail bank, like one of the big banks, like, the one that has a Stagecoach, and us as a mortgage broker, we have low overhead, and we're in a great position right now. We have lower rates, and we have lower fees.
Shopping around is probably the thing we need to emphasize to the buyers at this time.
Ray, I will never understand this one. People will spend 3 months shopping for a refrigerator, waiting for a holiday so they can save $200 on a refrigerator, but they go to the very first lender they find online, and they take that rate, and they don't take the time to just shop a couple places.
We were talking with you last week, and you mentioned something about the month of February and how the rates were the highest and the lowest. Can you talk a little bit about that?
Yeah, so in the month of February functioned the way every February functions for mortgage rates, as long as I've been doing this. And we had the lowest rates since October, and we had the highest rates since October in 21 working days.
The shortest month of the year.
Shortest month of the year, we had the most volatility in rates, and that's fairly normal year in and year out when we're in a purchase market for interest rates. My opinion, the good news is we're hitting that peak again that we hit in October, and the treasuries and the bond market are fighting that number, and they continue to hit this ceiling and bounce down, hit the ceiling and bounce down. Really, it's going to be, what does the Fed do in 2 weeks? Do they go a quarter? Do they go a half? If they go a half, the rates we have today are here to stay for a little while. If they go a quarter, we should see some recovery.
Okay.
Well, and I've asked you this before, but when someone is trying to shop rates, it's so confusing for the consumer who may only do this once every decade. to go through that process, what advice would you give someone so that they're actually comparing, apples to apples or oranges to oranges?
The first thing I will tell you is do not put your information into a lending tree or a best rate or any of these websites that are going to go search for the best interest rate for you. Because as soon as you do that, they're selling your information to about 100 loan officers, and your phone is going to ring off the hook, and every single one of them is going to have the greatest, best deal on the face of the planet. Shop locally. Look for a local lender. Look for a loan officer that you can go sit down across a table and have coffee with. You can shake their hand. You can go to their office. Rate is important, but it's not the most important part of the transaction. You need somebody that's educated and knows how to get the transaction done. And you need somebody that you can work well with personality-wise. As far as actual rate, make sure when you shop, if you're shopping 3 or 4 lenders, that you tell them the same thing. Use the same credit score if you looked up your credit score. Use the same loan amount. Use the same type of house. Use the same down payment. Because if you tell lender A that you're buying a $400,000 house with 25% down, and then you tell lender B you're buying a $300,000 house with 3% down, you're going to get 2 drastically different rates, and you're not doing yourself any favors because you gave them an apple for one and an orange for the other.
Right.
So when you go to ask the questions, make sure you're asking them or telling them the exact same loan amount, down payment, credit score, and don't let them pull your credit. They do not need to pull your credit to quote your rate. If all you're doing is checking to see where rates or fees are at, they do not need to pull your credit.
Is requiring a rate the same thing as requiring a pre-qual?
No.
Okay, I wanted to make sure.
Yeah. No. Getting pre-qualified or getting pre-approved is completely different than going and just shopping for an interest rate. At that point, we're going to pull credit. We're going to ask for your income documentation. We're going to ask for your assets. And then we're going to give you an idea of what you qualify and what programs are available for you. We take it one step further. We'll put it in front of underwriter, get it fully underwritten. And that's where you guys get those pre-approval letters that I give you to go out and shop with. And that just shows you're pre-approved and you're absolutely serious when you go out to buy.
So one of the things that we have said in the past as well is that as listing agents, we also like to see that it's a local lender, because we want to be able to have that same opportunity to sit down face to face and to be able to ask questions. It's a lot harder to dodge the hard questions when you live in the same town and when you have people that your reputation is at stake. And so it's a lot easier for someone who's invisible online to not answer the phone. So we just totally appreciate seeing a local lender and also someone who does have a lot of experience. The other thing that we run into is on occasion when we're dealing with someone that's not local is they send out appraisers that are not local.
Oh, absolutely. We've seen that without local, non-local lenders. An appraiser from up in Phoenix comes down and they don't know the marketplace. The other thing I like about a local lender is I know my marketplace. This is my backyard.
Right.
And underwriters are typically out of state and they don't know his backyard. So I can guide them down the right path with particular properties and what's going on.
Oh, that's great news. Well, that's good information. We're here with Jon Spurr of Inspired Life Mortgage. Thank you for spending part of your afternoon with us. You're listening to the I Am Real Estate Show with Ray Smith and Sandra Johnson on KVOI, The Voice.